Hey there, everyone. The market is definitely holding our interest right now. Bear market rally or bull run. Which one is it? Which one are we seeing? I think that we have several catalysts coming up that can determine the direction of the market, and that's in the very near term. We want to watch that and see how it plays out. I will show you with the SPY, the Qs, and several big companies to say why I think it's such a critical time and what's going to happen from here over the next few days, or I should say what can happen over the next few days. If you guys want to join me over at the Patreon where I talk about this stuff before I get a chance to bring it to YouTube, check that out. That link is down in the description. It's a quickly growing community where I share my research, knowledge, ideas, interests, you name it. It is over there at the Patreon. Check out that link down in the description. With that said, I'm Dr. Stock, Doctor of Education. Let's get right into it. So the chart that we're looking at here is the SPY, which tracks the S&P 500, and you have two blue lines drawn on here. The bottom one is our area of support, our next area of support. The top one is our next area of resistance, and we closed yesterday's market at 410, so we have about 0.5% down to that area of support, and then from there upward we have about 2% to get to that next really big area of resistance. You could argue that there are other places in between where we might settle on that resistance, maybe even about this 412 level, which would be a 0.5% up. So right now, you could say down to support, which I believe to be pretty solid support at 410, 0.5%. A little bit of resistance up at the top, 0.5% up. However, I think this other one, 2% up, is more likely that area of resistance. So that trade-off, that risk to reward ratio that you would get through trading the SPY, for example, could be something very lucrative. Now, it's not all as plain and simple as that, because if we actually look in the intraday market, let's actually go to the hourly chart one more time, 30-minute chart. We get a little bit better view. You can see the areas of support and resistance that I have. So down to 408, up to 418 in the early market hours that we have right here before market open. We can see that we're about $6 above that support in the pre-market hours. Low volume trading, so we can't really necessarily rely on this to be an indicator, a complete indicator of what we're going to have in the markets. It is significantly over yesterday's close, so about $4, about 1% up. That is something to pay attention to. Today could be a green day in the markets. 8:30, we got a catalyst coming up. I'll get to catalyst in a little bit, so we'll watch and see if that report as it comes out, if it does impact the markets at all. From where it's at up to 418, we have about 1% up from there. So about 1.5% down in pre-market, and about 1% up from where it's at. So keep an eye on that, watch it play out. But I want to go back to the daily chart. So here, daily chart, interesting time, and breaking down below this could be evidence that what we're seeing is a little bit of settling. And as long as we stay up above this previous low, if we actually stay along this trend line that we have along the bottom here. So if the lows of this chart, if we continue to stay on that trend line across the lows, so if we stay off the lows of this chart, we could be confirming that bull run stays the course. So if we land back down around the 200-day simple moving average, or maybe if we bounce off support with the 50-day simple moving average that's on here, that could be important for us to see those higher lows continue. That's further confirmation that instead of seeing just a bear market rally where we have a temporary uptick in prices, that what we see instead is a full-out bull run where we continue to put in higher highs and also higher lows. So keep an eye on that as it plays out. So that's just the SPY. Let me get to the others a little bit faster now. So here we're looking at the Qs, and what I have drawn on here for you is that area of support where we're at, which is what we've sold down to. And if I would go to my drawing tools and grab another horizontal line, we'll put on that area of resistance. So we have a little bit here at these previous highs. We'll go right to the top of this. So it's not going to be perfect, but we'll call it pretty good for right now. So we're currently sitting at about support. We want to see if that support holds or if we move upward to push resistance. And so if we look intraday for that, you can see once again, we're almost dead in between support and resistance right now in pre-market. So when the market opens, given the volatility that we've seen since the pandemic, this is definitely something that can come back down and retest support for us, or it can come up and it can push against resistance. Breaking through that would allow us room to push on to higher highs, and then that's, like I said, more confirmation that what we're seeing is a bull run rather than just a bear market rally. So keep that in mind. Let's move on to Tesla. So the case that I'm making is that what we're seeing is a critical time in the markets. So when we look at Tesla, we'll zoom into the recent price action that we have. we are at triple tested resistance. For Tesla, I believe that without any near-term catalyst for company-specific news, so anything that's going to move Tesla just on news for them. So we'll say that status quo, just everything goes exactly as it is right now for the next few days. The market will determine whether or not we break resistance on Tesla, or if we fall back and retest support down here at 178. The market will tell us if we're going to break through resistance, if we're going to hold there for a while, or if we're going to come back down and retest some of these areas of support that I have. 178 is that next area. So we actually have a significant amount to drop down from there. And like I said, I think it's going to be market dependent. And so those market catalysts are going to be huge for us. And it's not just Tesla. Let's go over to Apple. And when we look at Apple, once again, let me zoom out and get a better window here. So I have areas of support here for Apple. There we go. So for Apple, we have support, we have resistance, and it is right around in here. I'll adjust that just a little bit. There we go. So down as low as 151, up as high as 155. I realize we didn't look at intraday on Tesla, but the point of this is making that case. There we go. We're right pretty much in the middle of support and resistance. Let's go back to Tesla just because I'm interested to see where they're trading in pre-market hours. So for Tesla, I only had support on there, so we should take a look at resistance. They're actually trading. They've actually moved up significantly in these pre-market hours. I would not be surprised that at market open, we come back down close to that 200 mark. And again, market bias is going to really matter what direction Tesla goes in this early term. But that's important because for these companies that we have, and it's not just Apple and it's not just Tesla, you can look across Microsoft, you can look across Google, who Google actually had quite a little tumble there, with this competition with ChatGPT, OpenAI, which Microsoft is a part of, and bringing Bing search to revolutionize web search. Google releasing Bard, I mean, that's going to be that AI race. I think it's going to be an expensive one. It's going to be an important one. And when you have that competition, it's really going to push forward for innovation, probably like we haven't seen. So we'll watch that build out. And I think that it's going to happen faster than a lot of people realize. And really, it's going to be just a slugfest to find out who comes out on top for that. So let me go back to the daily chart here for Tesla. We actually have, let's look left a little bit more. These bottoms that we have over here, where are they at? So that's a low of 206. This one over here is a low of 208. And that's actually where we're at in the pre-market hours for Tesla right now. So we can actually smack into that resistance and hold steady there, and that could hold us down. And if we move to the next area after that, it's 231. And after the run-up that we've seen, you can see just how steep that drop was and just how steep the rise was. And we see these enormous volumes, and price does follow volume. So watching that happen was a good thing. In order to break through resistance and know that it's significantly broken and that is going to be sustainable, we want to see volume also spike on top of that. So if we see fading volume continue as we continue to test resistance, that key that we are seeing a true breakout could be igniting volume that would be high compared to the most recent volumes that we've seen. So just a few thoughts to keep in mind. If I had to say, I think the next move that we have for Tesla, for Tesla price action itself, is probably back down, but again, it goes back to those market catalysts. With that said, so 8:30 a.m. today is initial jobless claims. Watch for that to happen. I think it would have to deviate greatly from expectation in order to move the markets up or down significantly. So even though this is first chronologically, I think it's also the smallest of the catalysts that we have, assuming that it comes in near expectation. But we've been surprised recently, so we'll have to watch and see if we get surprised again. If we watch that go ultra low, it really could put additional strain on the labor market and cause something that, if there is demand for workers who just aren't there, then wages increase and then it spirals out of control from there. The next thing that we have is the survey of consumers, and the survey of consumers comes out, it's down here, Friday, February 10th. So that's tomorrow, and that is also, well, that's at 10 a.m. So when that comes out, that, again, if it deviates a lot from expectation, so last month it was 64.9. This month consensus is 65. If we see a drop in consumer sentiment where we have a weaker outlook on the economy, that's something that can drag the markets down, and then we drop through support. That's what I believe about consumer sentiment. If it comes in higher or better than expected, that's something that can have a really positive effect on markets. So we want to watch that take place. I think it's going to be a good one for us. The thing that I really want to know from that is inflation expectations. So over the next year, what's the outlook for inflation? Is it higher or lower than it was before? And when you look at this report, you can scroll down to look at the year ahead inflation that they report. It's currently at 3.9. So if that continues to moderate downward, and again, these are expectations, expecting less inflation is a good thing for markets. It can also impact inflation itself. So we do want to watch for that to happen. And then long run inflation is also mentioned down here. The expectations remain at 2.9%. So staying steady, good for markets. Going lower, great for markets. Going higher, bad for markets. So watch that consumer sentiment come out. And I think that that's our next big catalyst is Friday. But I think the biggest of them is what comes out on Valentine's Day. So right here, the January CPI, February 14th, 8:30 a.m. So that's Tuesday of next week. That will really determine the next direction for the markets. If it's a big leg up or it's a big leg down, black swan events aside, because, well, we don't know exactly what's going to happen, things that can blindside us out of the blue. So we want to be watching for that report to come out at 8:30. I will be watching for that. Right now, the expectation for that is 0.5% month over month for the month of January, which is 0.6% higher than what we had in December for month over month, which was negative 0.1. That is an incredibly, I don't want to say incredibly rare, but it's like right at the edge of rare. It's a 2 standard deviation event, which puts us at the end of the usual amounts of change. And even then, it only happens between 2 and 4% of the time. So if we went even one more higher than that, that's super rare. And I think that that can drag on markets. I think it's going to pull the markets down in the short term. Then we're going to be looking at the PCE for that better telling sign. Also, it annualizes poorly. So 0.5% month over month is 6% for the year for inflation, well above the target 2%. If we look at core CPI right now, the consensus for that is 0.4% month over month, which is only 0.1 up, which does happen. I believe it's about 15% of the time, historically speaking. However, that annualizes poorly again to 4.8, which with the CPI being correlated the way it is to PCE, and Jerome Powell kept on mentioning the PCE index, those ticks upward in CPI can also mean a tick upward in PCE, and we don't want readings to come in that keep on pushing us upward towards higher inflation. So he did say that they expect to have a little bit more for longer and that we could have a second resurgence. We're going to have to watch that. It is showing up in other economies around the world. We'll have to see if it also shows up in the United States economy as well. So that's what I have for you guys today. Thank you for watching this video. If you stuck around all the way through, I'd truly appreciate your support. Hit the like button and subscribe to my channel if you haven't. I've recently broken over 15,000 subscribers, and it's excellent to see the channel growing the way that it is. I actually have a goal set out for the number of subscribers to watch that happen, and that's a video for another time. But thank you. Like button, subscribe button. Thank you so much. If you want to show further support and see more of the services that I have to offer, including my research and my analysis of the stock market itself and also individual companies, please come on over to my Patreon. That link is down in the description. It's a quickly growing community, and I look forward to increasing the services that I have and the community involvement that is over there. I think it's going to be just a great time. Lots of minds interested in finance, investment, trading, you name it, moving forward from where we're at financially, just striving towards that ultimate goal of security and financial security and financial freedom. So thank you guys for watching this video. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.